Hi and welcome to the Market Alert for Thursday, the 17th of December 2020. So today's Market Alert is going to be slightly different. It's going to be divided into two parts, and the reason for that is quite simple. In part one, I'm going to just do a quick overview of everything. So if you just want the nuts and bolts of what happened yesterday, what is likely to happen today, then that's fine. That's in part one. And then part two, because of the demand I received from the Fibonacci video tutorial that I did in yesterday's Market Alert, I've had more requests to continue this for a bit. So yesterday I recorded all of the swings in the market, and this is all in part two. So if you want the detail, it's in part two. If you want a quick overview, it's in part one. Okay, so yesterday we had the Fed, and they're keeping everything the same. And as it says here, the Fed's saving its ammo for the double dip. And we know the double dip's coming because all we have to do is look at the implied volatility. We can see it's snaking along here. It has been now for several weeks. The double dip comes in the new year, in my opinion, as the volatility becomes narrower, more range bound. Eventually it breaks out, which is what you can see on previous occasions. And I can go back 10 years or 20 years of looking at this and show exactly that same pattern. When the implied volatility goes down to the lows, snakes, goes into consolidation, sideways range, whatever you want to call it. Once it breaks out big style. And here you can see the same thing in the color-coded version. We've had a couple of ambers, but since then we've gone back to green at the moment for the implied. And if we look at the daily charts for the Dow, again you can see the Dow is trading in a sideways range. It has got new all-time highs, and the all-time high is off this bar here. So we've got 30,327. So the Dow up 327 points above the psychological level of 30,000 and continuing to move high. And you can see there it's got the price action above the 5-bar moving average, indicative of wanting to actually take out those highs, which it could possibly do today. Meanwhile, in the DAX, we broke out of the sideways move yesterday, drove straight through this in the early part of the morning, and it continued on up. It just never stopped trading up to the R2 level, which I'll show you in just a moment. The all-time high for the DAX is at 13,827, and the DAX and the FTSE are the only two that are not at the previous COVID sell-off that we saw in February. And in fact, if you look at the weekly chart here, I'll just shrink this down a bit so you can see. This is where the all-time high for this market was. It's back here, which the date was 21st of February, or the week of the 21st of the February. And then the market sold off and has since made its way back following a bit of a corrective move here, and heading back to the 13,827, which is the all-time high. So yesterday, let's just have a quick look at yesterday's action, and then say you want the detail of all of this move, then watch part two where I take it all apart. So here we can see that the market straight from the off moved off the high, and the average is the 5 above the 20 and the 20 above the 200 MA, so bullish, and the market trading up to the R2 with all of the flash news as well. And then mid-morning you see prices hugging the R2, trading back up to it at 1:30 when we had some news release there. And then when the market opened in New York, pressure came in, and it also sent the DAX down, took it down to the R1, and then you get these retracements. I discussed this in part two and how this unfolded in real time, and then they managed to move the market back up. And then in the evening, of course, we had the FOMC meeting minutes greeted with a bit of a sell-off, but right down to the 200 MA. And again, you can see them buying back into the market and then bringing prices back up in the evening. Meanwhile, overnight prices have become very patchy. As I'm just scrolling through here, you can see that they're back above the 200 MA there, and also at and above, or just coming back to now, the previous day's high. And as I mentioned in yesterday's Market Alert, the high is very, very important. If you can get above the high and maintain the high, then you continue to make those highs. So it's going to be crucial as to whether the market can hold at this level. So I'm just going to scrunch this up, have a look. So we know if we are trading at the high, then we're above the DP, which we can see we are, and also higher than the previous day's close and above the 200 MA. So it's important that the market holds at this level if we are to continue up to the 13,827. Okay, quick look at silver as well, which has recovered. This is the weekly chart of silver, and I've had to go to a weekly chart so you can see the positions that I'm still holding in. This has been holding since March of this year. I did have another trade in this area, but unfortunately I clicked on the trailing stop on the order ticket and it took me out. So now I've got to look for a way to get back in, and that's not a problem because using the daily chart I'll find a retracement. I mean, at the moment we can see that we're still stuck in this sideways range, and if we get the sell-off in the stock market, we're likely to see this move back in this sort of sideways channel anyway. So I'm not going to do anything too rash in chasing the move. There'll always be the opportunity of getting in there, and plus the fact I already have significant positions in here and some nice profits, so I'm not too concerned. But I will be looking for some sort of a pullback to the 20 bar moving average to and also a fib retracement to get back into this and add more positions as it unfolds. Okay, so just before we conclude part one, let's have a quick look at the news for today, Thursday, December 17. And we've got MPC, official bank rate vote. Well, that's going to remain the same. As you can see there, all 9 members keeping rates unchanged. Monetary policy summary, official bank rate, again, it's a given at the moment. It'll only go lower, it won't go up, that's for sure. And then we've got the asset purchase facility vote, and then 1:30 fully fed unemployment claims, the weekly one, and the MPC Broadbent is going to be speaking again. So it's Bank of England today. That's the main news for today. So this ends part one. In part two, I'm going to take a look at the market activity using the fib retracement tool and go into detail about what we saw during yesterday's move. So with that, let's move on and take a look. Okay, so the market has opened. It's traded straight off the previous day's close. The volume is very high, and then we see a retest down to the 20 bar moving average with prices closing back above the 5 bar moving average there as well with high volume. So it's a good indication the market's already going to move high, particularly that it's already broken the previous day's high. And as I mentioned in yesterday's market alert, this is a crucial area, and if this can be taken out, then you can expect to see prices move to the upside, and we can see all of the green there. And also very important, here we've got the 200 MA below the 20 and the 5 bar above, so we've got the upward momentum already in the moving averages as well. So I'm just going to move forward through this. It's going to be quite fast because there's a lot to actually cover. So here you can see the previous high that we've got here, and it's also showing here, we see the market's heading towards this at the moment. We've gone through this 78 and this 89 again, which we covered in yesterday's market alert. So again, I'm just going to move forward, and you can see their prices now heading towards that BRN, and I'm checking back and forth. Now prices drive through. Now you can see that we're at the 457. I'm going to drop off the 13 there, so you can see that we've got this area of selling here. So we'll need to drive through this in the intraday chart, which we'll see prices do in just a moment. Now what I'm doing here is having a look to see where the all-time highs are, and what I've done is go back to February, found it, and you'll also see me having a look at the weekly chart in a moment, because as we approach this area and trade through it, we've got nothing in between because we're going back to those February highs. So if we're going to trade to the upside, we need to know where we're likely to find some sort of resistance. But unfortunately, as I said in yesterday's market alert, also that we had a lot of news to contend with, which is a pain. So here's the weekly chart, and I've already drawn this in. and we can see where the market is at the moment. It's at the 463 to a high back in July, August area there. So we're approaching the news now, and the market's moving higher, and the volume starting to drop off there. It's at its first initial move, and there you can see we've got some profit taking coming into the market. So unfortunately we have to well, we don't have to leave the market with the news, but it's a good idea. We've got a good run up to this point. So again, you've got a tiny bar there. The market's waiting for the news. The news is good, which you'll see in just a moment. It wasn't released on time, which is a real pain. But now, interestingly here, you can see that the market has broken through the BRN and the R1, and it's on very high volume. If I can just find the news for you, you will see that it was a positive news item. So they didn't release it on time, and you can see that this was the French flash, came out a lot better than forecast. Certainly on the forecast of the flash PMI, and then all I'm interested in is the numbers. The market there moving up to the upside on this news. Some selling pressure as the market went through this area. I suspect there was a lot of traders that were short, and of course having to get out of the positions also accelerates the move to the upside, which you'll see there as well, right up to the BRN. Market comes off the high, bit of profit taking at these levels, which you'll get, and in particular that we've got more news coming into the market at whatever it was, 8:30 is it, or somewhere around there. We'll see in just a moment. Yes, that will be it's either that or 8:45. So the market now trades sideways. It's coming back towards the 5-bar moving average, but then doesn't really move to the downside because the market's waiting for the news. I'm just going to wind this back a bit. I was just looking to see if there was anything special in the volume, but there isn't. And then we get the next news, which you'll see again also comes out positive in just a second, 58 and 47. So better for the PMI again for Germany as opposed to the manufacturing. So once again, we have more positive news for the markets, but as we'll see here, we get a bit of weakness coming into the market. Again, notice how this price bar and this price bar are very similar in that price is closed lower than the BRN coming off the highs there. So there's some selling in the market at this point. Otherwise, you'd expect it to drive through. So some potential weakness there. And then the market starts to roll back here. So I'm just going to show you what I did here. I'll just see if I can slow this down just a bit. So what I did was draw in some fibs here, and I've drawn from this low to this high just to get an idea of where the market's coming back to, because as I've said before, if it closes back above the 5-bar moving average and then can drive through this area, then it will continue the up move, which we're already seeing as a strong move in both the daily and the weekly chart. So as the prices come back through these fibs, I'll just remove them. As you'll see there, just keep taking them off until I can see where there's some sort of support coming into the market. But as I go forward here, you'll see prices continue to move towards the downside there. You can see them coming back. And then what I've done is drawn in the low here, so I can see what the market's going to do, if it's going to hold there as well. So let's just fast forward. And there we see prices. Again, I'm flashing between the daily chart and the weekly chart. I want to see where we are in the bigger picture. I'm always looking at the bigger picture. So the market is showing this strong move in the weekly chart breaking out. Even though I'm looking at a 2-minute chart, I'm using this to time. And straight away I can see that I've got a bit of an increase in volume here as the market reverses off this support that we saw to the left here. And what I've done now is drawn in the fibs from this high to this low, because these are the last two high and lows that are left behind. So these are my areas of potential resistance as the market makes its way back up to where the selling took place and the weakness came in before. So I'm using all the information that is in the charts, and now I've just expanded this out. Again, I go back to the weekly chart, just make sure we're clear in that 463 that we can see here. Got this here. I know it seems slightly odd to use the weekly chart, but you really need to know where you are in the bigger picture. And we've got the all-time high here, and the DAX and the FTSE are the only two markets that haven't gone back to the all-time high. So we've got the potential to do this, and this is why you want to be on the right side of the market. So here we've got the price is trading up to 62% up to here. And again, I can see from this volume alone that it's more or less the same as the previous bar. The range is narrower. So as the market got to the 62%, I know there's some selling going on here. Does it mean to say it's going down? No. What I'll do here, and I have done it, is I've drawn in from this low to this high, and I've got these areas here where I've seen the market actually find support before, and see what happens when prices come back. So we've just closed above that 5 bar, then closed back. And of course, we're waiting for news again. So now I've drawn back in the other fibs, and as we go through them, I just remove them off the chart and back to that BRN, where again the market this time manages to go through. And I'm just going to fast forward there. So again, we've got the market stopping at the 554, which is the new high that's been put in here. We've got more news to come out here. It's just a morning of news. The trouble is with the flash news, you get it for every, for France, Germany and the Eurozone. And there you can see we've got selling coming into the market. The price bars increased, the volume bar I should say is increased dramatically, and there you've got an upthrust type of bar, but it is finding support above the BRN. And also again, notice our prices close back above this once they've retraced. You get the support coming in, market retraces back above the 5 bar, and off we go once more. And that's why I use the 5 bar moving average, because it offers some sort of momentum. Now the market's hit this resistance here. I want to see what is likely to happen. Price is retracing a bit here, so again I've drawn the fibs in from this low up to this high, and then I can see these areas here where prices could come back to any one of these lines before moving back to the upside, and the 20 bar tying in with the 78 there as well. So all I'm doing is just following the rhythm of the market. It's just telling me what to do as it unfolds. So now I'm just removing all of those fibs. I don't need them. I'm going back to the daily chart. I'm having a look to see where prices are there. I've got resistance to the left once more, and unfortunately we've got another news item, but again you can see prices staying above that 5 bar moving average and keeping the 20 bar below it, and taking out the highs to the left, and that's what you want to see in an up move. So now the market moves sideways to higher, puts in a new high for the day. You've got some selling coming in here as well. Might be some profit taking as the market waits for the news. Now you'll see again I'm looking around at the bigger time frames, just making sure I haven't missed anything. Then I'll grab the news. Again, good news here for the Eurozone. This is for the whole of the Eurozone now. Manufacturing there, again good figures on both. And once more the market, once it's had its pullback, so now I will draw in the fibs, which I've drawn from here to here, because this is the high, this is the low. I want to see if the market is going to find support at these areas. We're back below the 5 bar, looking for something to close back above the 5 bar to indicate that the momentum is still on the upside. So the market pulls back 62. At this point I'm looking at volumes. That's all I'm looking at, and I can see it coming off the low of the BRN there, down at the 78 is where it traded to, an important area. Not as much volume as I'd hoped for. I'd look for a bit more there to actually go back off that BRN, but the point here is that the market's actually closing back towards that 5 bar moving average, and there's no selling around at this point. So what I've done now is gone from this high to measure the momentum to the upside to see if prices can get through this area. So have they got enough impetus to get through, and also take out the resistance to the left as well. So all the time I'm following the market's rhythm. This is what it's showing to me, and each time I'll look at the volume. As soon as I've got the fibs in place, my focus switches not to the from the fibs, but to what's happening in the volume and the price action, just to make sure that it's panning out the way I want it to. So what I've done there is just put that high to the left, because this is the new daily high for this market, and I want to see the market get through this and continue to the upside. So price is moving through the fibs. I'm deleting them as I go. I want to see the market drive through this area, and there I'm watching the volume, and this is the key. You can see at the moment we've got the same amount of volume as we had where prices closed back above the 5, and now it's got resistance in this area, which ties in with here where we had the pullback. So we've got the pullback to there and then starting to move higher. You can see, again, it's just the rhythm that the market is playing out here. So I'm watching the volume to see where there's weakness, and it's made it a new high there, and I'm seeing the weakness coming in. So what I'm going to do is to see how it's going to react as it pulls back. And there I've drawn in this low to this high, and I'm watching to see if it's going to pull back to any of these levels. We're still above the 5-bar moving average, and I'm sort of, in my mind, actually just reminding myself what I'm looking for. The market's still above the 5-bar, yes. Got some potential weakness, got this high, got this low, draw in this. Let's see if we get any volume buying back in this level to see if prices will continue to move higher. And if they're not closing below the 5-bar moving average, then I'm not concerned. And if I fast forward through this, you will see the market now just moving to the upside. I've drawn in this high off here, and again you can see as we're approaching it, we're having to have an increase in volume in order to get through these resistance areas. And again, price is staying above the 5-bar moving average, staying above the 5-bar, and then we get towards the R2. I'm looking at the weekly chart. I want to make sure everything's still playing out, and the R2 there, I can see I've got a problem in this bar. As we approach the R2, the volume is greater than the previous bar, and the range is far greater and the volume less. So I know I've got some selling pressure, and these are the bars that I'm going to get highlighted in the software, because these are below the average, but they are very, very powerful at alerting you to any potential weakness coming into the market, and then being able to use the R2 with all of this other information to actually maximize the profits that are available on the table. So now you can see prices closing back below the 5-bar moving average. So what I've done here is draw in the fibs from this low, which you'll see being drawn now. And then I've noticed also in this area here, let me just get the arrow tool, we've got a low here as well. So I'm just going to add another one on just to see if that I can get some sort of confluence of fibs as well. And now I can see this cluster here, where if the market comes back to here, it ties in with the 20-bar moving average, there's likely to be more support. But again, we're waiting for the news. But it was just something that I noticed there where I could actually add a few more in. So again, I'm going to fast forward here to the news. And this time it's bad news as far as the GBP services. It's the only one that had bad news there as far as that figure was concerned, but better on the manufacturing. Not that it really matters, but it was just interesting that it was the first red card that we had during the news there. So the market could be expected to have some sort of weakness in this area, because it's moved 170 points off the previous day's high at this time, and it's going to exhaust itself. If you've been long from the previous day's high and traded this as a professional trader, you won't be looking to stay in much longer, because you are way beyond the normal range for the day. So what I've done now is, as the market's coming back, is from the low to high, just to see where the market is likely to find some sort of support as we get towards the close of the morning session. So there you can see price is trying to come back. The 5 bars below the 20, and now we're sitting at the 38% and 50%. The market's gone back to the 20-bar moving average here and failed. And then you'll see prices move slightly lower there, down to the 50%, got rid of the upside ones. And what I'm looking at here is seeing what's going on in the 1 minute chart. And this is something else I'm going to actually bring into the market alert as well. And it is, once you've got to grips with this, you'll find you'll develop a fluency. It's like learning a language. You know, after a couple of weeks or a month or two or 6 months, whatever it takes, you'll be able to see and read what's going on. So now I can look at this and I go, well, I'm at the 62% retracement here. And in the 1 minute chart, this is a 1 minute chart, I can see that they sold and then they bought back. And that's at this 62% retracement. So inside of one time frame, I can drop down and have a look, and I can see what they're doing there as well. But I'm not going to do too much of that in this video. But this is how, again, you can see there where you've got the green test, because that's what happened inside of this bar in a smaller time frame. And it gives you a great edge, a fantastic edge. So anyway, we're heading towards the end of the morning session. There's your buy-in. You can see the market's reaction to it. And then you're already pre-warned by looking at this. And then the market trades back towards these fibs here. As we conclude the morning session, straight back 50%. And again, I'm looking inside of it to see if there was any selling. Not that I was overly concerned, because we'd already had the move of the day. So there you go, that's the morning session. I'm just going to move on to the afternoon session. It's, like I say, there's a lot to take in, so do pause the video and have a look. Otherwise, these videos are going to extend into hourly tutorials. So before the market opened at 2:30, I'm looking at the daily chart, the weekly chart. Again, I'm making sure everything's still intact. Having a look at a 5-minute chart, 15-minute chart. I'm having a look through to see how far back the market's retraced compared to the morning's move. In the 15-minute chart, I can see the big move all the way up to the R2, and then retracing a bit through the morning, and then lunchtime news as well, which we had. And then before the kickoff, I can see I've got, again, the R2 was where the market stopped in the morning, so I know where I am in the bigger picture. I can also see that the 200 has now passed through the 20 bar, and the 5 bar is below the 20. So we've got some weakness, even though in the bigger picture we've got a bullish move. Here we can see the market is trading with some potential weakness at the moment. So let's move on and see what the market does when it opens. So we kick off, and immediately we are met with some weakness. So what I've done is from the low to this high, drawn in these fibs, see where the market's going to come back to, see if we get any support around this area before the market moves back to the upside, which tends to be the pattern for the Dow. So as the market puts in the selling bar there, I just keep moving the fibs off the chart as we trade down to these, looking for signs that we may have support at these areas. We didn't get any. The market went straight through all of them and then continued lower. And I'm just going to draw this all the way through to this point. So as the market moves down, you can see there, now we have the news. So the market will pick up a bit of buying there. You can see waiting for the news. They're hoping it's going to be good news, but they've done the main thing, and that's bring the market down first, down to the BRN and the R1, and then get ready to move the market to the upside. So here's the news. We've got the US flash, PMI, and manufacturing, and then prices start to move higher. I've already seen the buying in the bottom of this bar here, and then prices trade up to 50%. And now I'm watching the volume at these sort of levels as the market's moving higher. I'm looking at the volume, and again I can see this is at least 95% of the previous bar's volume, but we've stopped at the 62%, and there's got to be some sort of resistance at this area, and that is precisely what occurs as you'll see prices now following, moving to the downside. So what I've done is picked up from here to measure these fibs back to the downside to see where there's some sort of support. So let's move on and see what happens. So you can, again, as prices come back through these levels, all I'm doing is just removing them, and I'm looking for an area where it does find support, and I'm watching the volume and hoping to see some sort of support coming in. So again, I'm looking at the volume, and I can see in this bar here that we've got an increase. The volume is, again, 80%, 90% of the previous bar, but it hasn't moved lower on at this point or closed above the 5-bar moving average as well. So I'm looking for that type of thing to happen. So now we go down to the 78 because there's still some weakness there, and then down towards the BRN, and down we've got that 89% there, and then all of a sudden you can see the volume building at this level. So prices now, having put in their bottom, I'm just then going to measure back the momentum from this high to this low, projected back to the upside, and then we'll just move forward. I'm going to fast forward through this, and again I can see subtle, but the volume is 90% in this bar now compared to the previous bar, and not again selling off. And there we see prices then moving to the upside. So again, having already been forewarned, and I've also drawn in some fibs from this high to this low, as well as this one to this one. So I'll start off with this one, the near term one, and then move back so I can see if prices continue to the upside where I'm likely to find areas of resistance. So again, now we're at 89%, and let's have a look and see what happens here. We've got some resistance, we've got the 20-bar moving average, we've got the confluence of the fibs as well in this area. So there's 2 fibs there, and then the market puts in some selling. I then draw in the fibs from this low to this high, and what we've got here is this churning in a sideways move before the market can either break to the downside or to the upside there, whichever way it breaks out. So what we're doing here is just seeing the oscillation where the market's trading between these fibs. So again, you'll see prices coming back, and again, as we go through these fibs, all I'm looking at is the volume. And again, I have a clue here because the volume has increased compared to the previous bar. I need to see the market get above these averages in order to move higher. So we've got this sort of consolidation phase going on. So now what I've done is gone from this high to this low, and that's what all of these fibs are here. I'm not trading this at the moment. I'm looking to see how the market's panning out. It's a really quiet range, but it's fascinating to actually do this. I mean, it keeps your mind occupied, and also it's absolutely fascinating what the market will actually do when it gets to these levels. And also, if you read the volume, you'll get the tip-offs along the way as well. So the market's moved up again, and it's stuck again at, if we look at this bar, again you can see it's 90% of the previous bar, stuck at these fibs, and it's got less range. So we know there's some selling inside of this bar as well. So the market then moves lower. So what I've done now is going from here to here, and it's getting a bit too messy and narrow at this point. But I thought, well, I'm going to carry on so I can show you what it's actually doing. So we're now back below the 20 bar. There is a slight increase in volume, but we've got all of these fibs now from these levels just to actually find support for the market. So once again the market comes down. I'll just remove the fibs I don't want, and then what I've also done here is gone to this low and this low as well, because we've got these 2 support areas here. And then immediately we see the market coming off the low here. But before we see that, again, this subtle bar here, this range of this bar is narrower than the range of this bar, and the volume again is 90+%. So again, I can see that the breaks are going on. We've got the fibs, we've got these extensions, and as soon as the market gets down to this level, it finds buying, and they move the market back to the upside. And then as we go forward now, I've got this, I've got this, I've got this, and then I've got the high that we started off with at 230 as well. So the market then starts to trade to these fibs, and then we get some selling. So again, we're stuck with this selling. So now it's important that I can see what's going on in these areas here from this low to this high. If prices don't pull back into any of these fibs here, then I know we're getting a change in trend. As I pointed out earlier, this sideways move to break out. And that's what it's pointing to at the moment, because we've seen the market buy here, and buy here. So I'm going to fast forward through this quite quickly now, because the market does break out to the upside with, again, highlight the important bit. So as it tries to break out, you can see that the volume is the same as the previous bar, but it's not making progress through these areas here. But it does eventually. So again, we come back again without trying to rush through this and not give you the information. So what I've done now is the market's left this high behind. I've got this low. So now I want to see, again, is it going to come back through and keep this sideways movement and prices trade back down through these fibs, or is it going to actually break to the upside? So again, you can see the volume building there. There's a lot of resistance to try and move prices to the downside, but they keep bringing it back. The 5 bar is now above the 20 bar as well there. So we're looking good. I've removed those fibs, and then I would just, you can see there now as the market starts to move higher, we've got a new high that's left behind and a low here. If we get a pull back to the 5 bar moving average, we've got a re-entry or a new opportunity. Again, I can use these fibs here in order to help time with this. But the market puts in another high. I'm going to fast forward all the way through this, because all I did was just keep drawing the fibs as the market moved higher. There's your 230. That was 89% of this high down to this low, and the market stops there as well. And as we go towards the 4 o'clock cutoff period, you can see there we've got a bit of a pullback. Price is sideways, and then we have this weakness. We've got market moving up, leave this high behind, so I go from there back to there and see how the support is in this area. The market comes back, does a double bottom, and then again I'm watching the volume just to see what's going on. Back at the 38% retracement before prices then move back to the upside, which you'll see in just a moment. I'm going to fast forward through. Again, all I'm doing is just trading the oscillation. There's some potential weakness there, bit of selling as the market increased on that selling, but again stuck at 50% retracement from this low to this high. And then if we break through, we go up to the 78%. So now I'm going to wind it through, and you'll see the market doing precisely that, trading to that 78%, which we'd marked up earlier, and then attempting to move higher up to the 89 and the 200 MA, which is a 62% retracement. I'll just bring this back from this high that we had mid-morning to this low, projected up, gives you this area where the market actually stopped, and we see some profit taking coming in, which is just after the 4 o'clock move there. So hopefully this isn't too confusing. Like I say, go back and pause it, but this video is very long, but it's important, and I've had a lot of emails asking me if I would explain this in more detail and show it as the market unfolded. So obviously it requires a bit more detail to actually put this in the video. I don't like to keep them too long, but if you're interested, then you will watch it. Okay, so that will do it for today. As ever, thanks for watching. See you in the next one.